Hey guys, Sarah Berry, CPA from Texarkana, Texas. Today I'm joining you from my home. Today is Thursday, April the 9th, and in this video we are going to be discussing the situation where a self-employed, sole proprietor, independent contractor wants to file a PPP application for an SBA loan. So the question has come up internally in our office and from our clients on how does someone calculate a payroll cost that is self-employed and has no payroll, no W-2 employees, but yet these self-employed individuals are eligible for the PPP loan. How do you come up with that average payroll cost number that is a driver of the PPP loan amount? So we're going to be talking about that. Real quick, I want to go over a few things. So in the application, in fact, let me switch on over here and pull the application up here. So here's the PPP borrower application form that came out last Thursday night. The bank started processing these forms on Friday, April the 3rd for businesses with employees, and now tomorrow, April the 10th, they will start processing these for sole proprietors and businesses that do not have employees. Okay, so here is the application form, and this average monthly cost that goes right here is a driver of the loan amount request goes in here. So the average monthly payroll times 2.5 gives you your loan amount. And note this box that says number of employees. I just want to go ahead and say if you are a self-employed individual without anybody on payroll, put number 1 there. Put the number 1 there because you will consider yourself as an employee because you're having earnings subject to self-employment. Okay, so I think you guys this is pretty self-explanatory here, but what I wanted to point out was page 3 of the application. So it's telling you for the purposes of the loan what goes into payroll costs, and then down here it says for an independent contractor, sole proprietor, or sole proprietor, wages, commissions, income, or net earnings from self-employment or similar compensation. So this phrase that says net earnings from self-employment has a specific meaning to tax preparers. And so that would be net. Let's look at that word first. So net means not gross. So net means after your expenses. So you would take all of your income that's come in on your Schedule C, because your Schedule C is subject to self-employment. So you would take all of your income for your business, subtract out your deductions, your operating expenses, and then you get to the net. So the net is what you're taxed on your tax return. So that's what net is, okay? So there has been some confusion as far as the bank is requiring 1099s as documentation for self-employment. Yes, they may ask for those. It's okay if you don't have them because not everybody gives you a 1099 when you're self-employed, but you can give them 1099s to prove that you truly are in business. But your PPP loan amount is not going to be based on that gross 1099 amount. So you're going to use your net from self-employment, and what self-employment means is it's subject to SE tax. So that 15.3% self-employment tax, that's what that means. So that tells me that it's going to be the net of a Schedule C, or it could be a statutory employee that's included on a Schedule C, or it can be net earnings from a partnership that is subject to self-employment tax. So now I want to take you to an Excel schedule that I created for us to use internally in our office, kind of walk you through the logic behind this. So when we're calculating our 2019 monthly average payroll costs and we don't have employees, then we're going to be using the net income from a Schedule C. So, or a Schedule F, which is a farm. It's subject to self-employment taxes as well. So that those two, net the amount that you're taxed on, would go into this line. And then the 2019 K1 from a partnership, box 14. So the net income of a partnership is generally subject to self-employment taxes. There are things that can flow through from a partnership that's not subject to self-employment, but generally it's subject to self-employment. So if you go look at box 14 on a 2019 K1 coming from a 1065, it's earnings subject to self-employment taxes. That would go into this line item. And then you would add in any wages from a sole proprietor that you are paying to your employees. So if I'm a sole proprietor, then I pay my employees, that goes into my payroll cost, but my net income goes into my payroll cost as well. So that's a unique situation. Most sole proprietors probably don't have people on payroll, so they're just going to have something in this box and not in this one. But it is possible to have both. And then you're going to add in health insurance paid by the sole proprietor. And then you're going to add in retirement benefits of a self-employed individual are paid by the sole proprietor. Now, I do believe that it is the obligations paid by the business. So it would be like a SELP or a simple, not really an IRA, because that would be like the employee, the individual side, individual retirement account, not related to the business. So I think it needs to be related to the business there. Okay, and so then you would add those together to come up with your 2019 payroll cost. Divide that by 12, and then multiply times 2.5 to get your PPP loan amount. So this monthly average payroll cost, the number you get here, would go into this box on your application, and then your PPP loan amount would go into this box. And then when the bank reviews it, they can look at your number here in the PPP loan request amount, and if you've attached a schedule like this, they can easily follow your logic. Now, what documentation would you provide to the bank in a situation like this? You need to have your 2019 Schedule C. And if you don't have your 2019 tax return filed yet, that's okay, but you do need to be able to produce a profit and loss statement, which would have your gross income deducting out your operating expenses on it. So the question has come up about depreciation. I think that is going to be a bank-by-bank decision as to whether they could take the net income and add back depreciation, or if you provide a 2019 profit and loss that doesn't have depreciation on there, they may make you take an allocation for depreciation. There again, we don't have specific guidelines from the SBA, so I think every bank's possibly going to handle it differently. But I think this points you in the right direction, and I want us to go ahead and start completing these for our self-employed and sole proprietor clients. And if you're doing your own, I do want you to go ahead and get these into the bank, because they will start processing. They're supposed to start processing them tomorrow. So as documentation, you can give them your Schedule C. If you have any 1099s that you have received, they may ask for those as well. But the sum total of those 1099s you received should not be a driver of the loan calculated amount, okay? If you are a partnership, you are a partner in a partnership, and your income is subject to self-employment taxes, then you need to give them your K1, showing the box in box 14 what is subject to self-employment taxes. Also, to document your net earnings from self-employment, I think it would also be a good idea to show the bank a Schedule SE from your 1040. So if there's any questions at all, they can see the income that's subject to self-employment taxes. Again, we're trying to get back to that net earnings from self-employment, which is in the description of the application. It's possible the bank is going to ask for some documentation that you were in business on February the 15th of 2020. Various different forms do that, but if you can show them a 1099 that you received in 2019, that would give them an indication that you were in business in February 15th of 2020. If you are a sole proprietorship and you're paying W-2s to employees, then of course you're going to have to provide your 4 941s from 2019. Some banks are requesting W-2s and W-3s. Some banks are requesting 940s, but some type of payroll documentation showing the amount that you paid your employees from your sole proprietorship in 2019. Let's see if I had any other things I wanted to mention here. So if your net on your Schedule C for 2019 was over 100,000, then it's going to be maxed out at 100,000, because that is in the rules that the PPP is not going to cover anyone's payroll more than an annualized $100,000 amount. What if you filed a 2019 Schedule C showing a loss? The SBA has not addressed this, but I do feel like you're probably not going to be eligible for a PPP because you did not have any earnings subject to self-employment. We talked about putting one employee in the number of employees box if you're self-employed and you have nobody on payroll. You yourself are considered an employee, so put that number 1 in there. I have been asked by self-employed individuals if they can get a PPP loan grant and draw unemployment. So I believe the answer is yes. I have not seen anything pointing otherwise, so I would say that a self-employed individual could draw unemployment and get a PPP. But all these forms of funding coming in from the federal government are not meant to double dip on each other. So what I would recommend doing is first getting your PPP before the funds run out. So go ahead and do this application, go through these calculations and submit your form to the bank. Get your funds from your PPP. Use that for 8 weeks to pay yourself as a replacement of other income. Once that is gone, then go draw your unemployment so that you're not drawing those both at the same time. I think it may come up in the PPP forgiveness calculations if you're a self-employed individual. Did you receive unemployment benefits at the same time? And if you received them at the same time, then there may be some forgiveness calculations that you have to take into account. So I would do your PPP first, then go draw unemployment. So talking about the forgiveness calculations, this is a question that so many of us have had over the last week. Sure was hoping to get some guidance from SBA, but they're dragging their feet and we haven't seen it yet. So on a business that has employees on their payroll, the purpose of the PPP is to cover payroll costs for an 8-week period. Payroll costs plus a little bit of utilities and mortgage interest and rent. Okay, but primarily it's to cover payroll costs. So a business has 8 weeks to spend that money paying their employees, and then they're going to go through a forgiveness calculation. There's a couple other things that will come into account with the forgiveness calculation, which I plan to do another video talking about what we know about the forgiveness calculation. But basically, in a nutshell, when you get this money, you have to spend it on payroll in order to get it forgiven. But how does a self-employed individual get this money and spend it on payroll when they don't have anybody on payroll? Well, if you're a self-employed individual, you yourself are on payroll, even though you may not be getting a W-2. Your net income is subject to self-employment taxes, so you are on payroll. You're covering the employer and the employee side of the payroll taxes when you file your tax return. That's on that Schedule SE. So how will you prove that you use these PPP funds to pay payroll in order to get it forgiven? So we don't really know the answer to that question yet, but right now I think it's safe to say that you can write yourself a check for the PPP proceeds over a period of 8 weeks. You want to disperse all of it to yourself. We're thinking that's the way it's going to go. We're not for sure yet. We are hoping SBA comes out with guidelines really soon. That's all I have for you guys now. We'll talk to you soon.